Good morning and good evening to you all, wherever you are joining me at this hour. Welcome to Investdata Trading Academy 394 edition, where, as we speak now, look at the market, at the global sense. The market is still very, very much missed. And this has a lot of what, the latest inflation figure that came from US rattling, investors, sentiment. We are seeing that many, market players are moving from left, right, trying to rebalance their portfolio, trying to, project what the figure, means for the next, policy meeting in March. These are what have, rocked the market in Asia, in Europe, in what in US. But the good thing is that in US, market is trying to rebound this morning. Why that of Asia? I will tell you the hot inflation figure that came from US has kind of put the market. Some were seeing profit taking. Why no? Japan market has hit 34 years high. I can see that it's pulling back just because of what market reacting to what to this news, and that also have triggered kind of up rally in US dollar, and also treasury yield going higher in a matured economy. It tells you that the power of economic data cannot be overemphasized. That's why I tell you earlier that the US Fed chairman have said it earlier that they're going to work more on data. That data will determine what action to be taken and what action not to be taken. You can see that immediately this data hit the market, it changed the psychology of the market players, both traders, investors, those that are in physical market players. You can see everybody trying to like position ahead what is likely to happen in the FFA meeting. And don't forget that in different domains before now, we have seen impact of high inflation on the economy. And that is why most of the members of Fed have been saying that they are going to see a higher and a longer rate cycle this period. And you can see that this hotter than expected figure that came, despite the figure that came was about 10% higher than what was expected, but market react to it because this is what will trigger whether there will be pause again in the next FPC meeting or they want to be rate hike. I don't forget that when there's rate hike, this fixed income market that have just rallied now will continue. Don't forget there was a time in US fixed income market that's almost gotten around 4.8, almost over 5% because of what high interest rate. These are the things that are going to shape the market, not only in US, it has started manifesting in other markets. And like I told you earlier, that stock in Asia slump as a lot of what as a lot of this consumer price index figure that were released. And as we speak, we saw that Japan index retraced back from 34 years high, like I mentioned earlier, and these are the things that also that taking the market. But in Asia, we saw that also some of that came from that environment too, especially this period, the one that came from the CBA also, which also one of the financial company there, so that the result for half year was not too attractive because there was a decline in profit, and also there was profit warning another one. But seeing losses, these are the things that also press down the market there. But I'll tell you that even Malaysia stock also see that stocks are also looking in the southward direction. These are the things that is happening in the market. But if you go to Europe is also what happened the trend we're seeing in US, that because of the figure that was also investors there also mode of panicking, trying to adjust their portfolio. That also affected that market as we speak now. But nevertheless, I think the US market is gradually finding its feet now. It's stabilizing now as we speak. US market have gone back to a grip position this morning because the market has opened higher than expected. You can see that investors also continue to analyze the outcome of or the reading of the inflation data, and that is why anywhere you are in the world, if you understand what is happening in your environment, that will go a long way to help you to make what informed investment decision. You don't just panic for panicking sake, but I know that this figure has strengthened dollar, while stocks are slide kind of slide. We saw dollar and yield moving not direction, while stock also come the way of the southward movement, because we know that this would also strengthen the instance of the Fed and their team that yes, the rate cut is not imminent. Rate cut is not near. That means this cycle was seeing a higher rate, and a longer one. It's going to continue, but how it's going to affect other emerging markets. Don't forget that in Nigeria, before now, no, we're saying that yes, when there's rate cut, foreign investors might like to be looking at where there's higher return, who to say one of our market is there, and there's another we're seeing another move. We're seeing from the from the body language of the CBN governor, who is the chairman of the monetary policy here in Nigeria, to attract foreign investors. But with this kind of move we're seeing, in this first inflation for January that came from US, it has sent signal that you might not see them coming. Why? Because they understand their environment better than any other person than coming to Africa, especially in Nigeria, where we are seeing a lot of insecurity, policy somersault, and also we are seeing that even the monetary and policy are not shaking hands as we speak now, because despite the subsidy removal and the exchange rate, we have not seen headway where we are going. Until we start seeing that, and that is why we need to boost the economy by our own policy, not just because we attract foreign investors. And with this move I'm seeing now, I don't see them coming as expected. Even with the hot money, you say that they are coming to for equity. Why? I tell you, what we are seeing so far is not hot money. It's marine Nigerians abroad that have brought money into the economy. But we need a policy that will sustain the trend in the market, because as we speak now, there is a great disconnection between our market and the economy. And that is why market correction is underway, and nobody can dispute it. The national market have rallied for almost a month to hit almost 40%. Correction is about to, and that correction will also go inside of what the booming economy situation. But for investors and traders, I tell you, no matter any market situation, there's always opportunity for you to make money. But it's possible that you will make the kind of money you make in the first month of 2024. But going forward, you adjust your expectation and your emotion to suit the current market situation, so that you can go in and out with 20%. 18%, 50%, and come. That is how it will be until you see another rally again. No market will remain up or no market remain down. It is the oscillation that we see in the market that creates opportunity for people to make money. But I believe that investors in our market are becoming sophisticated, and that's why we are seeing trend. That even on Wednesday last week, we saw what happened. On Thursday, we saw another trend also that happened. On Friday, this I tell you that everyone in the market is looking at where can I take less risk and more and higher return, and also where can I take calculated risk and get more return. These are the things that will be happening between now and then. But don't forget that I said oil price has also approached $80 for like almost last week. The market oil grew about 6%. That's fantastic, but we're seeing yesterday also like a flat market. But this morning, we're seeing that oil price also inch up as a result of what the increasing geopolitical tension toward Black Sea and Red Sea, and also the inventory of US and all those stuff. These are the things driving market, and the fear of this rate hike again has also pushed oil price higher. But I believe that for me, investors in any domain that understand the environment, let's figure that are coming from economic data like macroeconomic data information or reports, and also the company earnings that are still positive in this mature market. Here in Nigeria, we have seen the missed number from the unaudited account. We are still expecting to see the audited account, which expected that those early fighters like UCAP and MTN, are supposed to resolve this period, but they have been postponed because of their late board meeting in February. Before now, MTN come first week of the last day, 31st, 30th of January, but their board meeting is still in February. That of UCAP also have been postponed to February 27, 28. These are the things that we are not seeing now, but when they start coming, it will change the face of the market. But also, after we have seen the last Treasury B meeting, next 2 weeks, after this Wednesday, okay, after today now, the upper Wednesday, we will be seeing what the Treasury bill also will look like. Is the trend going to continue? Are they going to 28% from where they stop? These are the things that we should also be looking at. But I believe that the inflation figure that came in US has changed the trend. Not only a global strategy that whatever that happened in US has a way of what influencing the global market. You must keep this at the back of your mind, because those mature central banks, they give a lead. Yes, now our monetary people have seen a sign already from the mature economy. I tell you, rate hike is going to be reality on it come 26, 27, because the body language of the mature also rate hike. Also for that, I know that here our policy members or committee here in Nigeria will also follow that clue and likely also to create the board. They should know that our own inflation is structural issue, not because of too much money in circulation. Already we're importing inflation from what from international market because of what high exchange rate we are using today. These are the things that we look at. But in all, this exchange rate, which sector and which industry is going to affect? As we speak, we want to look at some number that came that will give us more insight the impact of this high exchange rate and how long is it going to affect some sector, which sector are going to benefit from it. How are you and I going to position to benefit from what is happening in the physical market, what is happening in the in the interest rate environment between the money market and physical market, and also what the MPR is, which sector is going to benefit from adjustment of rate, who will going to suffer from it. These are the things you'll be looking at, because every investment is against the future. We don't say because they will raise high, I want to pack it from the market. I say in this same market, there is still opportunity for you to make money. It's for you to understand the reading of the market and know how to position at the right time. That is how to stay ahead of the market. Once you get it right, I will tell you, you are already there. And that is why in this platform, another platform, continue to guide investors on what to do to stay ahead of the market. That is our own responsibility, so that we share it and you also go and act. What is that after hearing, I will take action? There is no difference between you, that those that were not here and those that are that those between you that those are not here because we are not taking action. But when you take action, you always come to level, and also stay ahead of what the market, and it's that you are making money because you are using the word, you are investing intelligently. You are not guessing, you are not going front and back with your decision, because you have removed emotion from your trading, and you are being guided by what your goal, and you trade your plan. Once you do this, I will tell you, you stay ahead of the market. Quick one, like I told you that US market is already up, which I mentioned earlier, and why it's up. As investors trying to reassess this news of consumer price index and impact. We saw how we put the market down, but as we speak now, the market is adjusting in the up direction this morning. For Europe, we saw a mixed market, and what out of Asia also, we saw that the market is on the southward because of reaction to the outcome of the reading of the inflation figure for the first one in the year 2024. But all this trend will continue, but because any season is also there, and we're seeing a lot of decision coming on the financial sector. We're seeing a major move. Analysts are changing their forecast because numbers are beating expectation in those markets, and that will be that the trend will continue to shape the market there. As we speak, our market also is also in the green direction at this morning. As we speak now, on the strength of high cap stocks like Airtel, Geregu, and also Boa Food. These are also stocks that are also some banking stock will see assets rebounding powerfully, and that of UBA. We'll do that when we come to the market. But in Africa, like I said, Africa is mixed, but Nigeria market is up. Quick one, I want to look at the latest on the account that came from PZ. This will give us insight on what we should expect from growth manufacturing sector as we speak now, especially those that has no match at their year end. Don't forget that for PZ has May at their end. We are seeing their half year result now. I give you an insight for what has happened within this half year. We are seeing how the results have been kind of scattered or chattered because of what the FS issue, and that's going to be a trend for those in that sector. But also because of the major move we are seeing, some are also giving opportunity for higher performance that also will drive their price. You can see what is happening, in Boa Food. You see what is happening also in the NASCOM, and also in the Dangote in terms of price movement. It tells you that there's potential for some, because you can see that Nestle have become a bit flat for all this while. For this result will give you insight to what you expect, even in terms of dividend at the end of the day. Yes, for PZ, what we call a turnover moved from 57.3 billion to 68.1 billion. That's about 19% up in the green. Why the bottom line that translates to a negative 74.1 billion. That means the loss alone is higher than a whole revenue for the 6 months for that period. That send a signal to you against a positive 7.7 billion recorded in 2022/2023. It says that this about above 1,000% loss for PZ for this half year result, and this translates to a loss of 18 naira 70 kobo against positive earnings of 1 naira 90 kobo in 2023. This, I tell you, is a signal that the impact of FS loss is really eating up, because don't forget, when they release the half year and the third quarter, the dollar has not even crossed the 1,000 naira. Today, dollar exchange in black market is around even 1,500. Even in the official price, it's not less than 1,200. I tell you, this is going to reflect on those companies that really import raw material, are also those companies that are also servicing debt that is across. That is why I'm going to see where our monetary policy is going. Because if Nigeria continue already, well, if there's further rate hike in the matured market, all our euro bond were saying you're going to pay higher what, higher service cost to service your debt, higher cost to service your debt in the matured economy, and also in domestically, you are increasing your rate, you're going to pay higher on this. I don't know where we are standing, and also why the private sector are having access to what, high cost of what, high cost of fund, and that will reduce productivity and business activities in the economy, leading to what, unemployment and also stagnation, which already was seeing sign of booming economy already here. That's why you can see that this sector, which is manufacturing sector, has not light where the economy is going. This is the result that half year that came from what, from prison. You can see as we speak now, I said that the loss for the period is higher than what the gross, no, the gross, higher than the turnover or the revenue for the 6 months, and also that also affected, the profit margin. Profit margin now is a negative, 108.9, profit margin against 13.4, and this has led also to a negative shareholders fund that, that turned from 48.4 billion in 2023 to what, to a negative 23.2 billion in 2024. This has sent a signal that that sector, my friend sector, is still very, very, hot in terms of what problem on increasing loss. Why am I meaning loss? FS is putting those business there in a tight corner, and that means you as an investor, what are you doing now? And that's why I said whoever that is not looking the world of insurance stocks and banking stock now to also rethink. Yes, my sales relation, but I tell you there's a lot of opportunity in insurance company. Their prices are relatively low with high what in treasury rate, and also what expect to see in NPR at the end of February. That will be a plus for insurance company because they are going to also, they are for like fund manager going to benefit from the rally, just as the bank is the major player in the money market instrument. I see insurance also a place to you to start building your portfolio, especially if you are thinking medium and long. And there are good insurance companies that you start building your tent with right now. I believe that is where you will make money again. And also, once you start seeing their audited account and also seeing their payout, will give us more insight what to expect in this new current financial year 2024. Because I tell you, sector rotation will continue as things unfold. You won't stay because you love, Nestle, you love Nigeria Brewery. You want to stay in an environment where FS is hitting their profit and turning into red. And at the end of the day, you don't expect them to come to pay you dividend from a loss position. For that, you should know where you should put your attention right away. Now, as we look forward to full year earnings report of 2023, and also expecting the first quarter result to start hitting the market, and for the month of April, we need to understand this so that you know how to rebalance your portfolio ahead of event, so that you can stay, afloat with your investment. This is very, very important as we speak. Yes, quick one, because of our time, want to look at what the market is doing right away. The market on its own now, right as we speak now, market is also in the green, like I told you earlier. Market is up by 2.2% right away, gaining almost 2,207.76 basic points. This is the market position. Market is in green, back to 130.915, back to 130,915.46. This is good for the market. Like so, as a result of what we're seeing that the market rate is still very, very positive. We're seeing 19 gainers against 14 losers at this moment. And the top losers right away are the top losers right away are Thermos Wax, Honeywell Flour. We're seeing also Morris Industry and what Cuties and the Hallmark PLC. Concord PLC, Concord PLC. These are the top losers. But if you look at the top gainers right away, we're seeing Airtel, leading, followed by Unity Bank. We're seeing UBA back to 26. Also, we're seeing Trans Express also leading, also among the top gainers, and also FBN Holding. These are the top gainers right away. And in terms of volume, also FBN Holding is leading in terms of volume, 36.72 million traded so far. UBA also 29.7 million traded so far. And Vetras, capital and insurance assurance also around 21.2 million shares traded so far. Transcorp is back and it's also trading 12 naira 84 people, 11.7 million shares traded so far, and GT code 39 11.2 million shares traded. This is the state of the market. But because of our time, we must quickly look at what is happening, what in the market. Looking at the chart here, like I told you last time, you can see that market is trying to rebound again. But we need to watch. You can see that market has formed what called consolidation, which I told you earlier, and this phase is what we call distribution phase here and here. Market maintain that position. Even when market trying to rebound now, No, market is not making lower highs, but I can see it's making a higher high again. I see up again at this hour. But because of our time, let me quickly draw what I'm saying now. That you will get it right here. See, this is the state of the market, where the market is now. And because market has formed a strong double top before coming to also form a double bottom and it reversed from this level. That's why you need to understand your chart, and also once you understand your chart, it helps you to know what you are doing. You can see here the double top market form, it pulled back, but it also formed double bottom. It tested the same line here, it tested the same line, it started going up. You can see the market was up for 2 days. Yesterday we saw a pullback. This morning you can see that the way market bounced powerfully up until break out this upward now. That is why now confirm another new trend entirely. But market is still within that wall consolidation period, which is also distribution period. Here is what we can say is accumulation period, but still, you can still see a lot of activities here until breakout. People like me will jump in again to stop. But at here, we are waiting to pull back at the breakdown. We'll now look for another support level to buy, especially as we're entering the peak of earnings season, where companies release their earnings and work with corporate action. This is the state of the market. You must know where the market is heading. Market is still not totally bad, but you need to play with caution at this point, because when market is consolidating and how long you're going to stay, to tell you the level of risk also that is involved. You can see how many days or weeks have you stayed within this period. You can see since the 30th of February, January, market has been oscillating within this period. Either a breakout or what, a breakdown. That breakdown is what, but I will tell you, let's watch. And also, when you see that the high cap stock is keeping the index up, take look at what in the sectorial index and in the just stock to see where to, because the market, I told you that the formation of the index is very dominated by what high cap stock. When they gain, the change index, that will not reflect a true reflection of the entire market. For that, you should have it at the back of your mind also when you are trading. This is the state of the market. But because of our time, let's quickly call our trading indicators and look at it smartly and see what it is they're saying before we call it a day. I'll continue on Friday, hopefully by God's grace. The thing most important is money flow. Money flow has continued to look. That's why I say we must look at it. Market is also looking up now. I see that your money flow is still making what a downward movement. No, even as speak now is below 50. I told you that when the money flow is going, it sends a signal. And market is getting this morning. I think there's a divergence between the money flow and the index action. It tells that market is still looking down. But if you look at this MACD, looking at the histogram here, see that there's a little sign of rebound until this money flow correspond with what we are seeing in MACD. That's why I say. But for now, the kind of a divergence between the index and money flow, which you also have at the back of your mind. Don't forget that our key line is our 8 days, so that we won't forget to always have it at your back of mind. You can see this is the state of the market now as we speak. But market is above the T line. For me, it's a good one. But let's also look at others. A quick one. Let's look at the 1 hour chart. Might not look at that stuff. 1 hour chart and see 1 hour chart. The market is still within that range. You can see it here. These are the things that you should pay attention. MACD has also shown a sign that on a shorter time frame, we are seeing that MACD is becoming bullish, and also money flow is looking up to it too. These are the things that is good that you look at your chart. This for a 1 hour. We have seen for a day chart before now. Then how it look like. Now look at what is the 4 hour start telling us as what is happening. 4 hours are telling us that market is still where it is. Like I can see within that range again, and money flow is still looking down. Almost the same pattern with the day chart. You can see. For me, there's no cause for alarm, but you trade with caution and don't be carried away. With profit. I mean, take to profit, and also don't panic out if what attracted into that stock is there. And also, if you have entered at the peak, at the pullback, you can break down. But if you know, you can also cut your loss at the right time and come back and buy lower, and get more volume at the right time. These are how to trade as we speak now. On this note, we'll call this last a day for today. We'll continue on Friday, hopefully by God's grace. I'll say see you and enjoy the rest of your trading day. Bye.